Uh, I just this is almost this sounds like they're not practicing truth in lending, if that's the proper phrase, Eric, by not telling people who don't have a college education that they pay more simply because they don't have the degree.
And actually, you know what? It's proliferated in the last 10 years as the industry has gotten their way with using credit scores. And I think since they've been able to win that war, and people thinking that credit scores really has to do with whether or not you pay your bills on time, people are unaware of the fact, the majority of the public does not realize that a large component of your credit score actually has to do indirectly with how much money you make from a thing called debt utilization. But yeah, I mean, the fact is that the industry has done a successful job, and I say this when I say the industry, meaning not me, even though we are part of that industry. It's put us in a very odd and awkward spot at opposing our own industry when we testify. It's basically me against the trade organizations that we're members of.
Yeah, well, it sounds like a scam.
Well, I can tell you that the worst case of this really comes back to a life insurance companies back in the '60s, prior to the civil rights. Actually, they used to actually use race, and they did an examination on one of the largest life insurance companies, and up until 2002, they realized that the only thing they changed from race after the civil rights was passed was they changed education level and occupation, and anybody that they thought was going to most likely be overrepresented by minorities or people of certain races, they would actually put those educational requirements and those types of occupations in that as a substitute for race, and they were sanctioned by that, and they settled a multi-million-dollar lawsuit. But I can tell you that the language being used by some of these carriers is incredibly scary because it almost resembles what they found with some of these life insurance companies.
Well, I mean, who put these policies together? The insurance companies, or did they need the legislature to approve it with a state law, or what?
Well, basically what happens is the process works like this, that the insurance companies devise how they're going to rate and how they're going to underwrite risks, and they file those packets of information, what we call rate filings, to the departments of insurance, respectively, or they have to certify that they're not violating any laws against discrimination. Depending on what state you're in, the Department of Insurance will do market conducts on you. They'll send people over and make sure you're complying with certain laws, and if you're going to increase your rates for certain people, they ask for credible data that supports it. Now, there's supposed to be a catch-all in all of this. In almost every state, there's a regulation that says it's not good enough just to show me that you have correlations to profits to a certain risk characteristic. You actually have to prove that that risk characteristic is causing higher risks of which you offer insurance for. I'll give you an example. If you categorize every driver and you say, I'm going to put in one group brown-eyed people and I'll put another group blue-eyed people, inherently and inevitably, you're going to have one group that has higher losses than another group, right? It's not sufficient enough to say, hey, look, I have blue-eyed drivers who have lower losses, so therefore I should charge less money to blue-eyed drivers and higher money for brown-eyed drivers. You have to meet that second component. Prove to me that eye color has anything to do with the risk of insurance in which you offer. And if you can't logically prove that, then you should be failed at being able to use that criteria.
Well, did they prove it with educational levels?
And that's what I'll tell you, that all the testifying I've done, whether it's in front of the House of Representatives in Washington on this issue or down in Florida, New Jersey, or New Hampshire, I can tell you that the only evidence they give is anecdotal evidence that shows loss ratios or profitability is correlated to education level, which I'm not arguing that. Higher income people do create lower losses and profitability. But that doesn't mean we agree as a people, as we govern this state or the country in which we run, by electing legislators, believe that that is a correct way of dividing who pays for what burden in insurance.
Yeah, you could pick anything. You could pick one-armed people, one-legged people. You could just play off with groups of people. Inevitably, one group will have, lower claims or fewer claims than the other group. And so, I mean, this could go on forever with with these insurance companies, creating different groups and classes of people.
Right. I mean, I think the first step is that, and that's why I love this show, is that you are getting people to understand that this is happening today, and it is wrong. And that's the first. If you don't know it's happening, I'll tell you, every time I tell anybody in a room that this is happening, they say, there's something absolutely un-American about this. You're basically saying we're the land of opportunity, but if you're trying to climb up that ladder, okay, we're going to kick you down. Because if you have a high school diploma and you're a janitor or you're a blue-collar working person at a U.S. Postal Office, we're going to charge you 40% or 50% more for car insurance than that person who's an attorney working in a law office making $200,000 a year, regardless of what your driving record says.
Yeah, well, it has the ability to outrage people, needless to say. Helen, hi, you're on the air.
Hi, I don't know where this guy's coming from, but I know people. In fact, I have a daughter-in-law who has just a GED, and she lives in an 8th-class county, and she has a very low rate because she's in the middle of nowhere. She has never had an accident. She's in her 40s, and she pays a very, very low rate. Now, my son pays more. He's had a few accidents, and they also pay according to their driving, how much they drive. She drives 30 miles to work.
Right.
And one way. And I drive, much less than, I don't even drive, I think, 1,000 miles a year. And they have given me $53 every 6 months. And, honey, I've got the college degree and then some. And I know some people that have PhDs, and depending on how far they drive, how many claims they've had, they get higher rates. And it also depends on your company.
Oh,
now, I have Geico. I call up, I say, here's my card number, here's my payment. I don't have any middleman. I call some kid on the phone. They take my payment, and don't tell me about insurance. My ex-husband used to work for Donegal, Kemper, and I could name you a whole bunch more. And you have a middleman taking 50% of your payment every year, you're going to be paying high rates, and they're getting their commission out of what you're paying. Whatever the heck you're blowing steam about, it's full of crap.
Well, I love your passion. I can just tell you this. You're 100% right that where you live, how you drive your vehicle, and what vehicle you insure are all valid factors that every insurance company uses. I'm not saying that they basically hand out policies that say, hey, if you're an attorney, you pay $50, and it doesn't matter what kind of car you drive. They're all isolated variables that make up what your rate is. So you're 100% right that your daughter may be paying very low rates because she lives out in western Pennsylvania where there are no cars. But what I'm saying is that if you take that daughter and you say the same exact information for where she lives, how old she is, what car she drives, and everything else, whether it's a $50 more or $150 more, the fact remains that some insurance companies in the state of Pennsylvania, as well as the state of New Jersey, can actually charge more money for that same exact person simply because they don't have a 4-year college degree. And everything is relative to how much money. You might think $500 a year for car insurance is cheap. I think that's cheap. But the fact remains that that person who has a PhD may be paying $350. I mean,
He's not.
What I'm saying is that everything is relative, ma'am. So you don't know unless you actually take the rate filings, I can prove them to you. You can go to the Department of Insurance and you actually see them. This is not something I'm making up.
The Department of Insurance, honey. Like I said, my ex was an insurance man.
Well, I work in the industry, so we file rates and we work with them.
I used to work in the industry too, so you're full of it.
Well, let me ask you a question, Helen, if I may. Do you believe that some insurance companies are charging more for people who don't have a college education?
I don't believe it.
Okay.
Some people who don't have a college education may be a little more risk takers because they weren't the kind of person that could settle down and handle studying.
Well,
what's that got to do with? Wait a minute. Hold on, Helen. I have my hold on for a second, please. I've got my headline break. I'll be right back with you.